We're up by just 2 points.
Ingrid, a great session for the Australian share market. I mean, on a day where the leads were negative, we saw the US session down for the second consecutive session overnight. And then, of course, in China, where we did see the growth target being adjusted from 7.5% to around about 7%. We've seen some big reactions in terms of the futures market over in China. The iron ore prices, the futures, they're down by more than 3%, and the rebar, the steel futures, down by around about 2%. And yet the Australian market manages to finish in the black. Now, this was mostly due to the banks as well as the material sectors, which really fought back in the last hour of trade. Just having a look at some of the sectors and the intraday graphs, this is the banking space. You can see that the market edged higher in the last couple of hours. Same type of chart for the materials sector. This is what it looks like. Of course, we didn't see it in all the sectors though. If we have a look at the energy sector, we didn't see much of a boost there. In fact, finishing more near the lows of the session today. But an impressive performance for the Aussie share market. Let's not also forget domestically, we did see the retail sales numbers for January up by 0.4%. Looks like clothing sales were quite strong. That gave Myer a bit of a boost, up by 4% today. Pacific Brands, which also owns bonds, up about 1.7%. So all in all, a great session for the Aussie market.
Okay, company news as well, because Macquarie came back online today and it looked like a pretty solid day for that bank. Just onwards and upwards for Macquarie Group. What do you make of it?
I guess Macquarie is sending some signals that it is willing to spend some money to buy growth, and in this case 90 passenger planes. It's done an institutional capital raising of $500 million. It is a high quality asset. If we have a look at the lease life on these aircrafts, they are long lease assets, and I guess slowly just replacing that revenue that was lost from the satellite funds. We have a look at Macquarie. A lot of things are moving in its favour at the moment. The falling Australian dollar, the strength of the markets, as well as its exposure to the US market, which has remained quite strong. So Macquarie doing well after that purchase and coming back online after the institutional component of that capital raising.
Mark Julia Lee, where do you stand on that?
Well, it's an interesting share price reaction. First of all, we saw Fortescue with a positive share price reaction. And then, of course, as news came out of China and we did see iron ore futures moving downwards, we saw it moving down and then it finished in the black. Now, if we have a look at Fortescue, it's the fourth largest iron ore miner in the world. The problem is that the three above it have much lower operating costs, and that's the likes of BHP, Rio Tinto, as well as Vale. And they managed to ramp up at a time when the iron ore price was a lot more attractive. Now, Fortescue did manage to pay off a lot of debt last year, but it's not doing that this year. And the key reason is that iron ore price. So that tumble that we've seen in the iron ore price, it's a number one factor. The fact that it's managed to refinance and get the maturity date of some of its debt out longer is a positive, but the number one consideration for Fortescue is iron ore price. If we see a bounce there, then it's highly leveraged, a lot more highly leveraged than the likes of BHP, Rio and Vale. But of course, if we continue to see weakness, unfortunately a negative.
Question for you, Magellan Financial. You've been watching this one, seeing a rise in funds under management, but the stock down 1.3%. Talk us through it.
It's been on a tear lately, so not surprising that a little bit has come back, but that's not much at all. Funds under management once again jumping from $33.2 billion to $35.3 billion. It's just been amazing. Over the last 2 years, this is a company that's had funds under management $10 billion 2 years ago, so now $35 billion. These are absolutely massive numbers, and just in the past year alone, funds under management up by a massive 54%. Now, the funds under management that they've announced today doesn't include another global mandate that they won in early March of $330 million. So that will be included in the next month's results. And of course, looking at growth through things like exchange-traded managed funds with their very successful Magellan Global Equity Fund. So Magellan Financial Group down by 1.1%, but the stock's been doing fantastically well over the last 3 years.